Holy smokes, folks, what a past year it has been for the public count. I mean, just an absolute skyrocket ride into a straight massive downtrend, into a skyrocket ride. And now we're in this time period where things are just kind of chilling out in the public count. And we're trying to figure out, are we setting up for a breakout here up to the $4 million plus level, or are we headed down, let's call it to the low threes? And so I want to speak in this video about where we're headed next, in my opinion, in regards to that. Google McDougal stock is exploding 7% after hours here on some news that came out. Obviously, this is a stock I do own in the public account. I own 444 shares. What's my opinion on this, right? As of tomorrow, we should be up way over 40% on this position in a pretty quick amount of time. So what do I do with it now? Do I sell it off? Do I just hold? Do I buy more shares? What about in the Patreon portfolio? The Patreon portfolio, I bought this stock week after week after week after week. Literally every single week I'm buying Google stock in the Patreon portfolio. So what happens now? Okay. Now, additionally, I want to talk about, I spent $30,000 plus on several stocks here today. We're going to talk about what stocks I bought, why I bought those stocks. I hope you guys enjoyed today's video. I hope you appreciate it. Only one thing I need from you guys: please hit the like button on this video. I hope you can do that for me. It takes like a second. Like, you could do it right now. All you have to do is hit the little thumbs up icon. That's all I need from you. Okay. I appreciate every single person that does that. Additionally, if you want to be subscribed here to the channel, you can certainly subscribe. We are now over 880,000 subscribers here on the main channel. So I appreciate y'all for being here. Pin comment down there today if you're looking to access all of my library or premium courses. That will be the pinned comment down there. You also get access to my private Discord chat, access to 1000xstocks.com, access to see the stocks I'm buying and selling in my $3 million plus Fidelity account, all that good stuff. Pin comment down there. That will be to apply to join my private stock group, private wealth group, 1000xstocks.com, and we'll send you your Steel membership cards in the mail to your house once you join us in there. Okay. Alrighty, guys, let's get rolling. So where's the public account headed next? Well, here's my opinion. If we look at the public account over the past 3 years, right, it reached that bottom, the fourth quarter of 2022. And ever since then, I mean, yeah, we've had pullbacks, we've had corrections, blah, blah, blah. At the end of the day, the trend is higher, right? So if we're going to have this trend end, we got to really have it end. When I say really have it end, I'm talking like a year-long type bear market, right? Now, when you look at the stock market, a lot of people are very scared of the stock market right now. And the reason being is the stock market is near all-time highs right now, right? And so it's always an interesting time when the market's near all-time highs, because you get two groups of folks to be interested in the market. One is people that are saying, oh, it's at all-time highs, it needs to crash. The other is people that have never bought stocks before get really excited when it's at all-time highs. It's a weird kind of mix that happens there, okay? Now, first off, what is most common when you hit all-time highs in the market? You hit more all-time highs in the market. It's not like, I wish it was as easy as like, oh, market hits a new all-time high and then it crashes. No, if you just look at some massive chart, you think that, right? Because you're like, oh, right there it reached an all-time high and then it crashed. And right there it reached an all-time high and then it crashed. And so now we're at an all-time high, that means it's going to crash. What about right here was an all-time high? Right here was an all-time high. Right here was an all-time high, all-time high, all-time high, all-time high. And then finally it crashes, right? So could the market crash now? Okay. Could, or we could go up here, 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 and then it crashes, right? So that's just something to kind of keep in mind there. Now, on the surface level, if you just look at the indexes, the NASDAQ, the S&P 500, you think, oh man, the market is such a boom. Like, it's incredible, right? But there's a message I sent to my private stock group today, and I put this in the breadcrumbs tab because I thought it was pretty interesting perspective I might have on a subject like this, right? Somebody that looks deeper into the market than just like the index level. I said, are we in a booming market or a bust market? I think it's a fair question. Look at the indexes and you will think it's a booming market. There's no debating that. Look at the NASDAQ, look at the S&P 500. You'd be like, oh, this market's booming. This is a great market, right? I said, what about the fact that big alcohol companies are 40% plus off their 10-year highs? Companies like Sam, companies like Constellation Brands. So what about apparel companies like Nike and Lululemon that are 50% plus off their 10-year highs? What about companies like Salesforce and Adobe that are down 25% off their 10-year highs? And I'm picking like brand name, like everybody knows these companies. Like, I don't need to explain what these companies do, right? So companies like UPS and Whirlpool down 50% plus from their 10-year highs. By the way, a company like, I just thought of like Constellation Brands might be one of the only companies here that people might be like, what a company is that? Look them up if you want. They own so many of the biggest liquor brands in the world. It's insane. Like once you look into the company, be like, oh yeah, I know that liquor, okay? Companies like UPS and Whirlpool down 50% plus from their 10-year highs. Companies like Wynn Resorts, Las Vegas Sands, MGM down 25% plus from 10-year highs. Obviously, Jack Jackson stocks have all gone bankrupt or they're down 70% plus from 10-year highs. Luxury king stock like LVMH, the king of luxury, down 40% plus from its 10-year high. Tesla stocks have been dead for the past 4 years. Small cap stocks have been dead for 4 years now. Interesting times. So when you look at it like that, you could make a very strong argument that we're not in actually a booming market, right? The market, you can make an argument that isn't that great. Because if you were really in a booming market, what would you see? Let me ask you this. If you were really in a booming economy, a booming stock market, let me ask you this question. Would all the biggest alcohol companies be 40% plus off their highs? Would Nike and Lululemon be 50% plus off their highs? Would companies like Salesforce and Adobe be 25% plus off their highs? Would companies like UPS and Whirlpool be down 50% plus off their highs? Would these resort companies be 25% plus off their highs, right? Would LVMH, the king of luxury, the one that owns the best, most important luxury brands in the world, would that company be down 40% plus from its highs? Would small cap stocks be dead for years and years and years? I don't know about that. And so when you look at it from that perspective, you could say, you know what? Maybe we have more upside ahead for the market and for stocks in general, right? Maybe this isn't the end of the road. And that's a strong argument to be made because we know the other argument that can be made, right? Stocks are at high valuations in regards to the top of the market, some people feel like, right? And therefore, that's going to bring the whole thing crashing down. The way I also got to look at this is long-term versus short-term. Because at the end of the day, like, I want $4 million plus in that public account, man. I can't wait. I cannot wait for it to hit $4 million plus. But with that being said, I cannot get caught up in that $4 million number. I want it so bad. I really cannot wait for the public account to hit 4 million. But I can't get caught up and start making short-term moves to try to like, I got to hit 4 million like this year. I got to hit $4 million. Like my opinion is I probably hit $4 million in the public account this year. If I don't, I don't. It's okay. If the public account ended this year at $3 million, right? It's fine. I think it's part of the process. As a long-term investor, you just got to ride the roller coaster, right? At the end of the day, listen, 3 years ago, in the fourth quarter of 2022, public account was $1 million, and it's 3.8 million or whatever it is right now. Do I want 4? Yes, I would love a 4. And then we're taking out 5. But at the same time, I cannot control what the stock market does. You cannot control what the stock market does. If the stock market wants to have a correction, like 2018, we have a correction. If the market wants to crash, it's going to crash. If it wants to go up higher, it's going to go up higher. We cannot control that. What we can control is our decision making in regards to our portfolios of stocks we buy, and are we trying to make short-term decisions to, boost our ego? And we got to stay away from that. And so my guess is public count goes to 4 million plus this year. I want it to go to 4 million plus this year. If it doesn't, that's fine. That's fine, man. Like, it is what it is. We'll be all right, okay? And so that's a way to kind of think about that, folks, okay? Google McDougal. What the heck is going on here? Stock popping 7% plus after hours. And what am I going to do with the stock now at this point in time? Well, here's what happened. Google shares, Alphabet shares popped 7% plus in extended trading as investors celebrated what they viewed as minimal consequences from a historic defeat last year in a landmark antitrust case. Last year, Google was found to hold an illegal monopoly in its core market of internet search. U.S. District Judge Amit ruled against the most severe consequences that were proposed by the Department of Justice, DOJ, including the forced sale of Google's Chrome browser, which provides data that helps advertising businesses deliver targeted ads. Google will not be required to divest Chrome, nor will the court include a contingent divestiture of Android operating system in its final judgment. Plaintiffs overreached in seeking forced divestiture divestiture, I can never pronounce that word right. I apologize, okay? Of these key assets. The moral of the story is here, Google's not going to have to get rid of Chrome. They're not going to have to get rid of Android. Is this a surprise to me? No. It's not a surprise to me at all. Like, this was to be expected. I'm surprised anybody's, surprised about this. And the stock popping huge. Like, I can't believe people thought like they were going to be forced to sell Chrome. They're going to be forced to sell Android and get rid of all this stuff. I'm like, no, come on, man. Like, I don't think enough people understand the legal system, how these things work. I don't think they understand what a true monopoly is. People think if you have a lot of market share, that means you have a monopoly. No. I remember even in college, in some very early business courses, learning what a monopoly was. Maybe that was business and law. I learned that. Yeah, I think I took a course in business and law, either freshman year or sophomore year at college, right? Before I dropped out junior year. And even then, I learned like what a monopoly was. Because, just hearing about the term, a company is a monopoly, I thought that meant like, you have like huge market share, so therefore you're a monopoly. No, that's not how it works at all. Look at the definition of what an actual monopoly is, and then you realize, wait a minute, just because you have a lot of market share does not mean that. You have to do all these different practices and, illegal things to essentially put you in that sort of position. So at the end of the day, like, Google has massive market share. We know that, but it's not a monopoly. And so, somebody that took freshman year, sophomore year college course realized, it's not actually a monopoly. And it's crazy. It's crazy. You would think the stock market, you would think investors would be intelligent enough to know like very simple business law. Like, this is, once again, this is something I learned in community college, either freshman year or sophomore year, and the stock market doesn't realize it. Like, the stock market, like, it's just crazy. Like, you think investors would be like they're so intelligent. No. Like, it's unbelievable to me. It's unbelievable, man. So the question is, what do I do now with my Google McDougal shares, 444 shares? Public count, up $24,000 on those. I'll let those ride. I do not have ambition to buy more Google shares in the public account. I feel good with where I'm at. Remember, the public account, what is the biggest position in the public account? It's Meta. Not only is the biggest position in the public account, it's by a mile the biggest position, right? There's $1 million plus position for me in the public account. So Google's a lot like Meta, right? Obviously, they have different services and platforms that they're dominant on, but at the end of the day, like, huge advertising business at Google, huge advertising business at Meta. Meta and Google, they dominate advertising in the world, right? And so owning Google is kind of like owning a Meta. It's just, the only reason I bought Google, in that dip was just people were being absolutely so irrational with the stock. And I'm like, this stock deserves to be at least 50% higher than where it's trading at right now. And I'm like, you're going to give me arguably one of the safest business models with one of the best income statements, balance sheets, cash flows in the world? That should be trading at least 50% higher now. Not like, it's going to go up 50% over the next 3 years. No, it should be trading 50% higher from the day I bought it. Right? And we're going to see that play out here very soon because we'll be up 50% on it. I'm like, give me that opportunity, I'm going to take it. So I'm not going to buy more shares in the public account because it's already so overexposed to advertising, right? No, in the Patreon portfolio, here's the deal. I could easily continue to buy Google stock. Like, I probably continue to buy Google stock because you got to understand, I do own Meta in the Patreon portfolio, but it's a really small position. And the reason being is, with the Patreon portfolio, the first year I was only allowed to deposit $150 a week. And then we changed it to now I'm allowed to deposit $250 a week. How much is Meta stock? Meta stock's like 700 something. So I can't even buy more Meta shares over the years, even though it's always been a great deal. So Meta's a really small position in there that I got when I first started the Patreon portfolio. And now I can't afford to buy more shares. So Google, I would love to continue to build this one. And then I can probably hold Meta and Google in there as kind of a tandem play. And then if you add those up together, they'll be like a big position. But if you add them up separately, they're not a big position. But when it comes to Google here, like, it's at 24p. Okay, it's up 7-8% tomorrow, whatever. Big deal. What's it going to put it at? A 21 forward P? Like, it's still a deal. So the bottom line is I got to keep buying Google McDougal in the Patreon portfolio. And when do I stop buying Google? I would say 275 and over. I would stop buying Google essentially. That would put the stock at like a 25 plus forward P, somewhere around there roughly, right? Which at that point in time, I'd be good on Google. And that does not mean Google's a sell at 275 or 280. That just means I stop buying. I'm like, I'm good. I'm good with what I have now at this point in time. So, yeah, there's still quite a ways to keep buying the stock. It's not like, oh, it goes up 7% tomorrow. That's it. The move in Google's done. Like, no, we got further to go here, right? I think that this also importantly, I think this sets a tone that maybe the government isn't going to be anti-big business, because there was a worry, especially with Linda Khan at the helm for the last few years. There's just a lot of fear around, oh, the government's going to go after big business. And I think since what happened here, because Google was the one that, you know, if you look at the Trump administration, the big tech I think they viewed least favorable was Google, right? And so the fact that a ruling like this comes out, I think it gives more confidence that the Trump administration and this next, 3+ years is not going to be, them going after big companies and trying to, take them apart and all those sorts of things. Because that was a little bit of a fear over the last few years. And I think that this situation, so if anything, I think this might give some more comfort to even like Amazon. I think this might give some more comfort to Meta. And I wouldn't actually be surprised if a lot of the big tech stocks rally on the back of this. Like, this news, yeah, it's great for Google, but I think it's also good news for Meta. If there's any fear about, could Facebook be separated from Instagram and WhatsApp, I think at this point in time, you got to throw that out. Could Amazon have to divest of AWS from the e-commerce business? That'd be so silly. I think no. Okay, and I think a situation like this gives more confidence. So if anything, I think big tech can rally on this. But the stock that's in big tech that I think this is the best news for, guys, I think there's a stock that this is even better news for than Google. I mean, it's great news for Google, right? But there's a stock that's arguably benefits even more from this. And it's not Meta, it's not Amazon, although those ones will benefit from this as well. You know who it is? Apple. Why Apple? No one thought about, splitting up Apple. The reason being is Apple's deal with Google, from my understanding, Google pays Apple tens of billions of dollars a year. That money should go to Apple's, like, pretty much straight to its bottom line. If things got switched here, that could affect Apple's profitability, we can call it in the tens of billions of dollars, which would have been a big deal. You would have had a big value derating in Apple stock, and we could have been talking about Apple stock goes well under 200 if that was a situation back into with something with a 1 in front of it. Now that you got that out of there, profit's going to keep pouring in there. So the moral of the story is, I think this is bigger than just great news for Google. I think this is great news for big tech. And what does that mean? It means great news for the stock market. Because who runs the stock market? Big tech. They're the biggest weights in the S&P 500. They're by far the biggest weights in the QQQ, right? So, I mean, positive. This is a big positive, man. It goes way, way bigger than just, Google, okay? Alrighty, next up here, I want to do a public service announcement. I need to do a little PSA, okay? First off, to everybody, I got a flat tire on my Model X, okay? I appreciate how many people have texted me, have come and rang my doorbell. All my neighbors, landscapers, pool men, everybody's been reaching out to me about this flat tire. Holy smokers, this ain't no joke, okay? I've got to get it fixed. I got to take it to the tire store in the next few days, okay? But I appreciate everybody letting me know. I am aware I do have a flat tire in the front yard of my house, okay? Thank you very much, okay? Next thing I need to make people aware of is stay away from the casino. This just was making its rounds in Las Vegas here today, city I live in. Dana White allegedly owes Red Rock Resorts $25 million, and it could be as high as $50 million. I mean, this is a crazy number. I've lived in Vegas a long time. I know the gambling industry pretty decent. I mean, it's not very often you hear about markers that can go into the tens of millions of dollars. Like, that's crazy. And I have heard from people before, that have seen Dana White at Red Rock Resort gambling some money before. So, it doesn't surprise me. And so I need to do a PSA to remind everybody, if you play at the casino, understand you're giving them your money, okay? Even the games with the best odds, you're giving them your money. And that's fine. Like, just understand it's a form of entertainment. And you're going to lose the money. No different than you pay to go to a movie, you lose the money, okay? The problem is people go to the casino and they have this like fairy tale that they're going to always win. If you play at a casino over the long term, you will always lose. You can get lucky on a night. You can get lucky on a trip to Vegas. And, oh my gosh, I won a few $100. I won thousands of dollars. Like, everybody can get lucky. Oh, I hit the slot machine for a big payout. Listen, all the games are rigged for you to lose over time. That's how the casinos make money, okay? And so don't think you're going to go in and win all this money. As Steve Wynn famously said, who has a net worth of nearly $4 billion, he said the only way to win at a casino is to own one, okay? That's how you make money at the casino. Own a casino. Don't go play at a casino, man. You end up with all this, ugh. And we hear about these stories all the time. There was one that was going viral last year that Bruno Mars was big time in debt, supposedly to, I think it was MGM. Oh, it's a bad situation. Sheldon Adelson, Mr. Las Vegas Sands. Yeah, they calculated his net worth right before he passed on. You know what it was? Nearly $30 billion. Yeah, own the casino. Which reminds me, every time I think about the Adelsons, you know what I think of? I think about how they're one of the, Vegas, we always have water problems, right? Like, we don't have a lot of water. Run out of water. We have to reuse all our water, right? They did this study a few years ago on the homes in Vegas that used the most water. I was not on the list, okay? I was not on the list. But the number one was this Prince of Brunei house, and it used an astonishing, ridiculous amount of water. 13 million gallons of water a year this house used. It was just ridiculous. 46 bath house. Oh my gosh. But the Adelson, I always think of Adelson's because their house was number 2 on this list. I remember seeing this list, and they had the second property that used the most water in Las Vegas, just a ridiculous amount. And I've been by this house before because I've been in this community many times doing photo jobs back when I had my real estate marketing company. But yeah, this was their, you can't even call it a house. It's just ridiculous. I don't even know what to say about that house. Just absolutely insane. Floyd Mayweather, by the way, Floyd Mayweather's house came in at number 37 on the list for the most water used. Dana White, or Mr. Dana White, Mr. supposedly 25 to 50 mil in debt to Red Rock, right? Dana White's house came in at number 6. Number 6. Oh, and then the ones that own station casinos, the Fertittas, which supposedly Dana White owes a bunch of money to, they were on the list several times. The Fertitta Family Trust has homes in Summerlin, landed at number 9, up from 32. Lorenzo and Victoria home comes in at number 3 and number 57. So they're all using the water. And, new money versus old money. A lot of these people live in this old money community. I know this community. I would never live there. I got to be a billionaire. I would never live in this community. This community, I don't like it. It's like everybody there just wants to live in a little jail cell. They put all these trees around them for, I guess, privacy. And then they the gates in front of their gates. This is already a guard-gated community with security, by the way. And it's just it's not how I want to live. And so it reminds me of, you guys ever seen The Great Gatsby? And the old money guy is always looking down on the new money guy. I'm a new money guy. So I my next house is going to look over the whole city, right? I like all the openness and just I don't want to feel like I'm in a little jail cell. I like all that openness. We look over the city, but that's new money mentality. This old money, they like to live different, right? I look at this old money and I'm you couldn't pay me enough to live in a place like that. What? Ugh. But there's new money versus old money. The old money looks at me and they're ugh, I don't want to live the way you live. I look at the old money and I'm I don't want to live the way you guys live, right? 10 years ago, I was living in a 1,200 square foot apartment, right? You know what I mean? All my big money all came in the last 10 years, with all the stock success and the YouTube success and all that. New money versus old money is a real thing. People think it's just a Great Gatsby. No, it's a real thing, man. The new money, we look at them, we're I wouldn't want to be you. Old money looks at us we wouldn't want to be you. It's life, man, okay? Alrighty, guys, next up here, the 4 stocks I bought here today and why. Well, number 1 was Nike. NKE. Bought 77 shares of Nike. About a $5,700 move in the public count. First off, I had $150,000 plus just chilling in the public count, kind of cash from some profits taken throughout this year. So I spent, 30,000 plus of that today. But yeah, 77 shares of Nike. And when it comes to Nike, am I worried? Because this is a position I'm down on 4% in the public count, down $8,600. I'm 0% worried. 0% worried, right? Nike's already bottomed, first off. Like, it already hit that $50-ish bottom, right? So, we'll shake around. Like, could the stock hit a 60 again? It's always possible. But I do not believe we're going under the lows that we already reached several months ago, essentially, which was, I think it was 52 or something like that, 55, somewhere around there, roughly, right? But short term, I'm zero. Like, the short term, we all know at Nike is in 2025 is just not good. It gets better in 26, and it gets a lot better in 27. So I'm 0% worried about Nike. Like, every decade, they got the right CEO there now at Elliott Hill. I've already seen him make some great moves. And so I'm 0% worried. Now, some people say, why buy Nike? Why not Lulu? Because Lulu's been hammered, right? Hammered. Brutal. The thing with Lululemon and why I want to buy Nike over Lululemon is Nike's brand has proven itself decade in and decade out since the 1980s, right? And I've gone through this many times on the channel before about Nike and, major stock price declines and, the business being questioned. But at the end of the day, every decade, they're more relevant than the past decade, and they make it through, right? I don't know if Lulu's going to be able to do that. The reason Nike's brand is able to get, have so much success decade in and decade out, because they spend such an unbelievably exorbitant amount of money on marketing, on making sure the best athletes in the world are wearing their products and they get those moments and they have their logo everywhere, and you think of their logo, you think of success, you think of people winning championships and holding up trophies, and it's just phenomenal. Lululemon doesn't have that. So Lululemon is known for having an extremely successful yoga pant. Nike is known for having championships, and there's a big difference there. Nike is known for Michael Jordan. Nike is known for the best athletes in the world wear their products. Lululemon is known for a successful yoga pant. The yoga pant that every woman's wanted the last 10 years, right? There's a lot of competition in yoga pants now and all those sorts of different products. And so Lulu hasn't done enough to make a brand that you say, yes, this brand is going to be a banger for the next 20, 30, 40 years. They made their brand around a product. Nike built their brand around the most successful athletes in the world in sports. When I go to buy a Nike product, I'm not thinking about the pant or the shoe. I'm thinking about, does it look good? And I'm thinking of success. It's a big difference. And so I think Lulu is still dangerous. Nike, on the other hand, I don't look at it as dangerous at all because they have a brand that makes it through. They have a Louis Vuitton brand that you just make it through, right? Sometimes Louis Vuitton's a little more on than other times. Sometimes Nike's a little more on than other times. But at the end of the day, they get through their bad times. And the thing you got to understand about an extraordinary brand like a Nike, their bad times are still better than everybody else's best time put together. That makes an incredible business. That's why I choose Nike over Lulu. That's why I haven't been bullish on Nike or on Lulu the last several years, because I've looked at that stock and I'm like, like there's a lot of risk that people don't understand. If you just look at the numbers, if it was just about the math and the numbers, you could make a great case for Lulu. But when you dig deeper and you start understanding human psychology, brands, all those sorts of things, marketing, then you start to put pieces together and you're like, oh, dang, if Lulu was really spending aggressively to build their brand, I would think differently. But you know what would happen? If Lulu decided they were going to go out there and start buying the best athletes in the world, putting Lululemon all over everybody's jerseys and get in with the NBA, and you know what would happen to Lululemon's math? Get devastated. They would probably start losing money because they would have to spend so much money that they would probably start making very small profits. Their margins would go to crap. And then investors would be looking and like, we're spending all this money, are we going to get the payout for it? Nike gets away with the crazy spend they do because they've already proven their business model. With Phil Knight way back in the day. Lulu hasn't. So if Lulu's decided, okay, we're going to spend another $500 million on marketing, on athletes, on all this stuff next year, investors would be like, huh? You can't do that. No. Stock would crash way worse than what it's crashed right now. That's the important part to remember, and that's why Nike always has a competitive advantage over everybody. And so all these different shoe brands, athletic brands, they come and they go. Decade after decade after decade. And we'll be the 2030s, we'll be talking about the same thing. Nike's going to be dominating again, right? And then I'm sure there'll be some new brands, and we'll be like, oh man, new brands coming to take out Nike, right? Oh, they're going to come eat Nike's lunch. It'll be like 2035, we'll be having that conversation, and that brand will then falter, and Nike will remain, and it's just the same story. Repeats itself again and again and again. Next one up here I bought, number 2 of these 4 stocks, is Honest. HNST. It was about a $5,700 move here. Honest just way too cheap. I'm looking at the stock at $383 here today. I love Honest. The CEO has taken over the last few years. Carla has done an amazing job. Like, look at, since she's taken over that company, right? Look at what's happened to its revenues, margins, profitability, cash flow. It's unbelievable. Unbelievable. What a turnaround. Look at its income statement now versus, right after she took it over. Look at its balance sheet now versus right after she took it over. It's not even on the same playing field. Like, it's unbelievable. So I have so much confidence that Carla is going to continue to build out this company and get them through whatever they need to get through. And it's a need-based business model. Like, you look at everything they sell, diapers, wipes, beauty products, all that sort of stuff, like very needs-based. I like Honest a lot here. I think the stock's been heavily disrespected, and I don't think it's going to remain like that. Okay. Next one up here, number 3 of these 4 stocks is Adobe, ADB. So about $7,500 move here, $353 a share I paid for these Adobe shares. Listen, I understand this is a hated dog stock right now. No one wants a piece of Adobe, right? No one wants Adobe. AI is going to destroy the business model, all this stuff, right? I understand, I get it. But at the end of the day, here's the deal with Adobe, okay? This is Google 2.0. So Google, the fascinating thing about Google is it's been trading way too cheap the last year. And the reason it's been trading too cheap is because all these worries. ChatGPT is going to disrupt it. The government's going to take them apart, blah, blah, blah. Right? All these worries, right? And all came, to basically not matter. And so with Adobe, I see a very similar situation. I see the stock trading at a forward P of 18. I see the 2-year forward P of, we can call it around 14, 15. For a business model like this with these sorts of margins, like, come on, man. And so I look at Adobe and I see a Google 2.0 situation. I see a stock that as soon as it starts to move, it'll move 50%. Quick. That's why I'm buying out as many shares as aggressively as I can, right? Without trying to get overexposed to stock. In case I'm wrong, whenever I buy stock, I understand I could be wrong. Might not be the one, right? Might make a mistake. I don't think I'm wrong on Adobe. I think I'm going to be right, and I wouldn't be surprised if we fast forward a few years from now, and I'm sitting on massive gains for Adobe if I still hold it then. I wouldn't be surprised if it's a year in the future and I'm up 50% plus on Adobe. I wouldn't be surprised at all. Once that stock moves, it's going to move fast, just as Google has done, right? Now, Adobe was one of the stocks I featured on 4 stocks I'm buying now, September 2025 edition. It looks like about 103,000 people have gotten to see that so far. If you want to hear me talk in depth about Adobe, you can go ahead and watch that video, okay? Next one up here I bought is a brand new stock. It is Whirlpool, WHR, a surpriser. Whirlpool, what the heck, Jeremy? You're buying a washer, dryer, oven, refrigerator company. Oh my gosh, right? They own KitchenAid too. They make those awesome mixers. We got one at my house. Like, you got to have one of those mixers, man. Those are the OGs. Here we go. Start a position today in the public count, $90.81. 110 shares. This is a fascinating stock because I got a lot of pushback on Whirlpool. I really did. And a lot of people are like, I don't know about that one, Jeremy. I don't know about that one. And I get it, and I like it, and I welcome that. I welcome the questions. I don't know about that one. Whirlpool, Jeremy? I don't know about that one. Now, you can obviously watch that video. It was the first stock I featured on the video. So if you want to hear my case around Whirlpool, I think it's a pretty strong case. on why that stock could do tremendous the next 2 to 3 years, right? And you didn't hear me talk about the stock's going to do tremendous for the rest of this year. Like 2025, this year's thrown out. But I think the stock's going to do great 26, 27, 28. And I made it, I think, a very strong case. But a lot of people are still like, I don't know about that one. And I welcome that. I love that. I love to have a dialogue. I love to, the old Jeremy would have gotten offended by that. Oh, how dare you even question one of my stocks? Nowadays, I'm like, okay. Like, I actually look for more bearish articles on a stock or bearish commentary on a stock than I look for bullish commentary. My mentality's really been changed over the years. And I welcome it. I really welcome it. I love it. Because I want to always see, like, is there something I'm not seeing there? Even in regards to the market, I like to hear more bearish commentary than bullish commentary. I specifically try to listen to more perma bears because I'm just like, is there something I'm missing here? Let me hear the bearish argument. Let me hear it from the people that look at the world glass half empty. Let me hear what they have to say. And if I can listen to them and deal with that and be able to say, you know what? Okay, that's not actually a big issue. Then we're talking. I don't want to just like be naive and like not hear it. I'd rather hear why it's bad, why it's not going to work, why it's going to be a bad investment. It makes me think a little harder. Sometimes there's a point where I'm like, hey, that's a good point. That's a good point. How do I counter that? Or maybe it's not worth countering. Maybe they're right and I made a mistake and I got to move on. So anyways, I welcome that sort of stuff. If you want to hear my case around Whirlpool, you can certainly check out that video, okay? Appreciate y'all for joining me as always. Thanks so much for being here. Once again, if you're looking to apply to join Private Stock Group, Private Wealth Group, 1000xstocks.com, all that good stuff, you can go ahead and click the pinned comment down there, send you your Steel membership cards in the mail to your house once you join us in there and get you up to a much higher level than where you're at. Much love and have a great day.